17 of 20 exact option contracts changed on tonight's masterboard. That sounds extreme, but it does not mean the research made 17 new market predictions. Tonight, we slow the list down and show exactly what changed, why it changed, and what each contract is actually telling us. We will spend most of this video on the complete top 10 calls and top 10 puts. Every row will follow the same order: rank, exact contract, appearance history, premium at risk, and the catalyst that could matter. The percentage is Barchart's estimate that the stock finishes beyond the ask-based break-even price at expiration. It is a model estimate, not a forecast. Only 3 exact contracts stayed on the board from Tuesday night: the TeraWulf $17 call, the Supermicro Computer $40 call, and the Cipher Digital $15 put. The other 17 spots changed. Some companies disappeared. Some returned with a different strike. Others entered because their current contract data compared better with the rest of tonight's field. That is the first lesson. A company can remain interesting while its best research contract changes. Start with TeraWulf, symbol WULF. The September $17 call climbed from number 5 to number 3. Same contract. Its same-day volume rose from 4,407 to 8,216. Open interest rose from 18,418 to 20,168. The observed asking price eased from $1.12 to $1.05. That combination improved the contract's current tradability and cost profile relative to the field. The business catalyst is TeraWulf's long-term artificial intelligence data campus lease with Anthropic. The risk is capital, construction, and execution. The call climbed because the contract fit improved, not because a price breakout was confirmed. Supermicro Computer, symbol SMCEI, gives us a second clean example. Its September $40 call climbed from number 10 to number 5. Volume rose from 7,848 to 9,116. Open interest rose from 14,635 to 19,928. The observed ask fell from $2.33 to $1.89. The company catalyst is record artificial intelligence server backlog with an improving gross margin. The risk is execution, financing, compliance, and a reversal in expensive artificial intelligence shares. Again, better contract data earned more research attention. It did not create an entry. Cipher Digital, symbol CIFR, shows the other side. Its September $15 put faded from number 3 to number 7. Same-day volume fell from 1,658 to only 344. Yet Barchart's expiration estimate improved slightly, from 29% to 29.7%. Why did the rank fall if that 1% improved? Because no single number controls the board. Lower current trading activity outweighed the small gain in the model estimate. The catalyst debate is artificial intelligence data center leasing versus construction, financing, and tenant execution risk. Now look at SpaceX. It stayed number 1 on the call side, but the exact contract changed. Tuesday used the September $155 call. Tonight uses the September $150 call after the observed stock price moved from $143.34 to $139.65. The board adjusted the strike to the current stock and contract landscape. Tesla did something similar on the put side. The observed stock rose from $336.87 to $351.12. And the board moved from the October $320 put to the October $330 put. Same company debate, different contract. Here is tonight's complete masterboard. All 20 are watch and contract radar only. None has a verified stock price trigger, invalidation, live buyer versus seller spread, or position size decision. So none is buy ready. Verify every price live. Number 1 is SpaceX, September 18th, $150 call. This exact contract is making its 4th appearance and has returned to rank 1. The observed ask was $6.30, or about $630 at risk for one contract before fees. The model estimate was 26.9%. The catalyst is post-results momentum against the August 20th share unlock. Number 2 is Intel, September 18th, $100 call. First appearance. The observed ask was $4.05, or about $405 at risk. The model estimate was 26.5%. The debate is a better-funded foundry plan against dilution and chip sector pressure. Number 3 is TeraWulf's September $17 call. Second appearance, climbing from number 5. About $105 at risk. Model estimate, 29.2%. Catalyst, the Anthropic Artificial Intelligence campus lease. Number 4 is SoFi, October 16th, $20 call. First appearance, about $88 at risk. Model estimate, 26.2%. Catalyst, post-quarter growth, with credit and interest rate sensitivity as the risk. Number 5 is Supermicrocomputer, September $40th call. Second appearance, climbing for number 10. About $189 at risk. Model estimate, 26.5%. Catalyst, record artificial intelligence backlog and an improving gross margin. Number 6 is Netflix, October 16th, $85 call. First appearance, about $294 at risk. Model estimate, 26.4%. Catalyst, post-quarter growth and content momentum. The risk is high expectations and content cost. Number 7 is NVIDIA, October 16th, $230 call. First appearance, about $870 at risk. Model estimate, 27.3%. The major event is NVIDIA's August 26th earnings report that can move the stock and the options implied volatility in either direction. Number 8 is Kerr Mining, September $22.50 call. First appearance, about $95 at risk. Model estimate, 27%. Catalyst, record second quarter results and precious metals prices. Number 9 is Freeport-McMoRan, October $75 call. First appearance, about $330 at risk. Model estimate, 26.4%. Catalyst, copper prices and operating execution after second quarter results. Number 10 is Hecla Mining, September $22 call. First appearance, about $103 at risk. Model estimate, 27.8%. Catalyst, second quarter execution, silver prices, and exploration progress. The important list level change is the new metals cluster. Kerr, Freeport, and Hecla all entered together. That is not 3 independent predictions. It is a shared sensitivity to metals prices and sector momentum. Number 1 is NextGen Energy, September $10 put. This exact contract is making its second appearance and return from prior rank 8. About $50 at risk. Model estimate, 26.2%. The debate is Rook 1 construction progress against project timing, funding, and uranium price risk. Number 2 is Tesla, October $330 put. First appearance for this exact strike. About $1,325 at risk. Model estimate, 27%. The bearish case is valuation pressure. The direct risk is strong deliveries, energy growth, or autonomy headlines. Number 3 is IonQ, October $40th put. First appearance, about $360 at risk. Model estimate, 28.4%. The debate is record revenue and raised guidance against large losses and a demanding valuation. Number 4 is SpaceX, October $130 put. First appearance, about $900 at risk. Model estimate, 28.4%. The catalyst is the August 20th share unlock. Added supply can create pressure, while strong demand can turn the same event into a squeeze. Number 5 is Nebius, September $210 put. First appearance, about $1,675 at risk. Model estimate, 28.8%. The debate is rapid artificial intelligence capacity growth against the capital required to build it. Number 6 is CleanSpark, September $11 put. First appearance, about $80 at risk. Model estimate, 28.2%. The debate is a long-term data center lease against weaker mining economics and recent losses. Number 7 is Cipher Digital's September $15 put. Second appearance, fading from number 3. About $145 at risk. Model estimate, 29.7%. Catalyst, artificial intelligence data center leasing against financing and execution risk. Number 8 is CoreWeave, September $85 put. First appearance, about $515 at risk. Model estimate, 27.7%. The debate is enormous artificial intelligence demand and backlog against debt, spending, and capital intensity. Number 9 is Mara Holdings, September $9 put. Fifth appearance in return from prior rank 5. About $60 at risk. Model estimate, 27.5%. Its direction remains closely tied to Bitcoin, energy economics, and infrastructure execution. Number 10 is IREN, September $40 put. First appearance, about $350 at risk. Model estimate, 28.7%. The debate is large artificial intelligence cloud contracts against capital spending, execution, and possible dilution. The put side has a clear cluster too. Nebius, CleanSpark, Cipher, CoreWeave, Mara, and IREN. These companies can react together when investors change how they value artificial intelligence infrastructure, Bitcoin exposure, debt, and future capital needs. The public outcome ledger contains 105 one-session scanner observations. Using the original asking price as entry and the later observed buyer bid as exit, with quoted spread drag included, 22.9% were positive. The average was negative 14.8%, and the median was negative 18.3%. These are scanner observations, not trigger trades. They do not prove that tonight's contracts will lose, and they do not establish an edge. They show why a rank alone is not enough. Price confirmation, execution cost, and risk control still matter. Tonight's rule is simple. Follow the exact contract, not just the ticker. The common mistake is treating a first appearance or a higher rank as a prediction. A rank earns research attention. A verified setup must still earn the trade decision. This is the best chance daily, professional-level tracking for regular people with regular jobs. Subscribe, and we will keep showing what changed, why it changed, and what the evidence supports. Educational research, not personalized financial advice. Options involve substantial risk and can expire worthless. Verify live prices, liquidity, events, and suitability before making a decision.